Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Aditya Birla Fashions. The valuations are expensive, so let's understand what needs to be done and how you can get into the stock. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about AB Fashions, a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put out from time to time. Plus, you can ask me one question every day. And if you can pay for 10 months straight away, that's $100 upfront payment. You get 25% discount and you get 1 year access by paying for $100. For detailed or market company talk, you can directly email me and we can work things out with a fee. Now about the company, Aditya Birla Fashions was established in 1997. Is one of the biggest retail fashion brand here in India. Has nationwide presence with multiple stores. Their major brands are Allen Solly, Louis Philippe, Pantaloons, Peter England, etc. And is the part of the Aditya Birla Group. The market cap of the company has risen from 16,000 crores, so it is around 20,000 crores, 25,000 crores or so. If you look at the financials of the company, then these are Q3 FY21 numbers. So just a point on the market cap. The market cap has risen from the time I made this presentation. So the presentation was made about 10-15 days back, and since then the stock has also run up even further. So these are Q3 numbers. So sales have gone down actually by 21% for the December quarter, and profit has been quite tremendous. So 58 crores of profit versus a loss of 37 crores, and that is the turnaround we are seeing, and that is why the stock has risen from around 95 to 98 a year back to around 198 already, or over 200 already. It is a high debt company because it is a capital intensive business, but the company is doing extremely well on the growth front. High promoter and institutional holding is a very big positive, and a very good return ratio of around 25% ROE, operating profit margin of 14%. All in all, the numbers look extremely robust, and that is why the surge has taken place in the stock. Now what we need to understand is whether these valuations are good enough for somebody to buy into the stock, and what should be the time frame with you in order to reap the best rewards. So if you look at the stock performance, it has been an outperformer since March 2020. So it fell a lot in that Feb March fall, around 40% or so. But since then it has risen a lot, and results have been decent, especially for the September and December quarter. The results have remained quite good, and I hope to see good numbers on the March front as well. It has more than doubled from the March 2020 numbers. In fact, it has gone up 2.5 times from the stock price of March 2020. Return ratios are very good. In fact, in this industry, it is one of the best, around 20-25% CAGR, with the kind of business that it does. But looks expensive at these valuations. It has run up a lot. It's trading at around 45 to 50 times earnings, which is fine for a consumer company, for you can say somebody who is selling appliances, electric equipments, electronic products, or food companies, etc. But for a garment company, yes, they are also a kind of a consumer company, but these companies normally trade at the lows of 10, around 10 times, 8 to 10 times, so at maximum 20 times. Right now it is trading at 40-45 times. It is expensive in my analysis. Numbers should improve as things open up, and probably that is why this is an opening up trade that is going on, and currently everyone is quite bullish on the opening up trade, and people are moving away from pharma and hospitals and all those kind of healthcare kind of sectors, because it seems like we have had the worst of the tsunami with respect to the pandemic behind us, and global economy is already opening up. That is also a positive, because raw material gets sourced from abroad, to make the product, and there is some sort of an export that the company also does. So that is going to get some fillip going forward, say 2 quarters from now. So all in all, that is the reason, or these are the reasons why the stock has surged over time. But when should we buy, whether should we buy, let's understand that. So what needs to be done? Business will suffer in the short term. You need to understand that. So probably numbers of the June quarter will not be that great. March quarter would be good. So the stock may just be range bound here after the surge that it has already seen. Difficult times may lead to lower margins going forward. Now that is also a concern, that when they want to sell more and bring more people to their stores, they would like to give larger discounts when things open up, so that they are able to have higher sales. So the margins may suffer going forward, and that is going to impact the stock price, which is already trading at a higher valuation. But things will be better, say 1 year from now. So if you have a perspective of 3 to 5 years, these are good levels. On major declines to 160, 170 would be very good levels to get into. There could be a correction due, I believe, in August. That's when, around when the June numbers would be out. But someone can buy some now and buy some later on, when the decline takes place. If the decline takes place, that would be my understanding. So this is my video on AB Fashions. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.